Welcome back, you guys and gals. It's about that time of day again here, folks. It's a Wednesday, the 29th of January, 2014. Welcome to your nightly newsletter. Boy, what another roller coaster ride we had today. I told you guys we're going to be in for some craziness here in today's markets, and I don't think we got disappointed at all, did we? Now, let's talk about what happened today. We'll do a little bit of review of what the FOMC said, although they pretty much repeated what we already knew. And then I want to grab some charts because we've got some important events tomorrow going into the Chinese New Year on Friday morning. So stick around for that. First of all, we came in this morning and what was happening? All hell broke loose in the equity markets. We had India, South Africa, and Turkey overnight. Now, Turkey increased all of these. South Africa, Turkey, and India all raised their interest rates overnight in kind of an emergency meeting and kind of an extraordinary situation. Could you imagine if the Fed here in the U.S. had an emergency meeting out of the blue and then all of a sudden raised interest rates twice as much as they normally do? That would cause panic as well. And of course, that's what led to this big sell-off today on the Russell, on the Dow. Boy, equity markets just getting killed here the past week. Tough to tell where this is going. I'm still very bullish long-term with the U.S. economy. But this FOMC report had to get behind us. We've got to get January out of the way because January is just littered with all of these 2013 reports. Today was the last FOMC report we're going to hear from Ben Bernanke at the helm. We'll be replacing Mr. Bernanke with Janet Yellen on February 1st. This is the last FOMC report for him. So we've got kind of a new beginning starting at the beginning of next week. Now, the equity markets got pounded tonight, this morning, early in the morning, and it really never really rebounded throughout the rest of the day today. So equities dropping overnight. Started off in London. Well, the London traders had a ball this morning. I came in this morning at 8 o'clock to start our trade room. And, of course, all of our students that are in London are too busy counting up all their money. It was very easy trading short on the equities this morning. That's where I made most of my money this morning. Crude oil also down early in the day. We saw a really kind of a very strange, well, I shouldn't say strange because there's no reality in these FOMC days. So we knew the plan today, if you guys watched our newsletter last night, the plan today was pretty simple. Can't predict. Anything goes, right? We really were expecting pretty much everything. We had a very, very active day for being an FOMC day before the 2 o'clock announcement came out. I was blown away by how much volatility we saw before noontime today. So you didn't have a hard time finding any patterns. But the most important thing today was keeping an open mind. So we came out, we saw crude was moving lower, sold short on crude. Equity markets getting their butts kicked, sold short there as well. Gold comes out of nowhere and rises on the day. Of course, why does gold rise? Because now we're thinking, well, and again, bad news is good news is bad news. Who the heck knows? But gold jumps higher today on speculation now that with the increased tapering, it's going to affect emerging markets. Who the heck knows? Technical patterns are always going to be key, right? We can speculate about what's going to happen tomorrow, but in all reality, just like today, tomorrow morning, I'm going to sit in front of my computer. I'm going to open up my workspace here. And if I'm going lower, I'm selling short. If I'm going higher, I'm buying long. I don't need to know why. All I got to know is where and when, right? We talk about that in our trade room. So a little bit of a review here. So again, the final FOMC day was today with Ben Helicopter Bernanke. We'll be replacing him with Janet Yellen. She'll be taking over the reins of the Fed February 1st. Today's FOMC announcement, very optimistic. As I was looking through the report this afternoon, I'm reading this report going, these guys are cocky, right? They're confident. They are very confident and optimistic right now. Some of the bullet points here, the Fed decides to maintain its current pace of tapering at $10 billion per month. So what that means is that the level of asset purchases goes from $75 billion, right, to $65 billion. This time next month, $55 billion, $45, right? So it'll keep ticking down. That's how they're going to be tapering. Tapering off of course, buying bad debt, buying mortgage-backed securities, buying long-term treasuries, I won't bore you with the details there, but what you got to take away from today's FOMC announcement is that tapering is most likely here to stay. They removed some of the wording, right? For example, if you read through last FOMC and compare it to today's FOMC, the word may, and may is a very important word. It's only a 3-letter word. But when you hear last time around, it says may continue tapering on data dependency, right? So in other words, if the economic news continues to be strong, last time we saw the FOMC report, they said we may. This time the word may was removed. So that tells me, if you read between the lines, I would expect the new norm now to be monthly tapering, right? Less and less. Guys, the party's over. I won't say the party's over. The party's never over for a trader, right? Being a trader, the party never stops. But the reality is the cheap, easy money, right, for banks and, of course, unfortunately for the average consumer is going to slowly be pulled back. Tough to say what's directly going to correlate to the consumer on the street right now, because I think a lot of banks, I know me personally, I recently purchased a home, and looking at financing, the banks are still marking up this 0 to 0.25% Fed funds rate. So it's very difficult to tell what that's going to look like as far as the consumer side goes. Consumers have been pretty confident, so hopefully they know a change is definitely going to be felt here going into the end of the first quarter of 2014. So again, 10 billion scheduled pace for the tapering. FOMC, basically some quotes here. The economy continues to expand. Recent jobs report was weak. It was very interesting how they commented this afternoon. They almost were ticking off all the boxes, right? And they commented on that very weak jobs report that we saw the 1st of January. Remember that weak jobs report that shook up the markets a little bit, wondering if they were going to continue for the tapering? Well, apparently they didn't have any problem with that weak jobs report. So they keep on looking at tapering. Household spending. And I think this is really what kept them on focus of tapering, was the household spending and the consumer confidence. I personally believe that our FOMC, our Fed, they understand that whatever's really going on out there really doesn't have a lot of bearing. It's what the consumer thinks is happening, right? Unfortunately, what makes us the American public is what makes us the American public. So we know that only a few consumers really know what's going on out there on the big scale, right? So I have a funny feeling that household spending and that very bullish consumer confidence that we continue to see, so consumers continue to make more money, although it be at a moderate pace. They continue to have confidence, and every time we see a consumer confidence report, they did also say that housing market continues to be a little bit of a struggle. It looks like they're trying really hard to put a bullish tone to that, but housing market definitely pulled back at the end of last quarter. Very dovish, right? Now, what's a dove? This is a term that you guys need to know because they really embraced this term in the media. A hawk and a dove. You guys know what a hawk and a dove is? Now, here's the way to remember it. A hawk is somebody who believes that higher interest rates, right, lower inflation, are better for our economy. A dove is somebody who believes lower interest rates. Now, it took me years to think of an easy way to remember this, but here's an easy way. Hawk, higher. Hawk, higher. Higher interest rates, a hawk. Now, what would Ben Bernanke be? He'd be a dove. Janet Yellen, she's a dove. What does that mean? That means that they see nothing wrong with keeping interest rates low, right? They see nothing wrong with keeping interest rates low. Now, obviously, interest rates are going to have to creep up, but it doesn't look like, after reading the commentary from the Fed, it doesn't look like that's going to be on the radar anytime soon. So interest rates will continue to stay low. Tapering will continue here on that $10 billion per month pace. All right? So look forward to more tapering on that. Gold reacted higher today on concerns that tapering will affect emerging markets. Crude oil pushed higher to last week's high. Very interesting scenario on crude. We get a higher inventory number today, and today was probably one of the only day of the year that you're going to see the crude oil inventory number take a back seat to something else for crude traders, but it really did. We went into the market this morning knowing that it really could flip around and go anywhere ahead of that FOMC report. So we were open-minded to everything here this morning and made some pretty good money in the trade room this morning because of it. Mini Russell gets crushed today, along with other equity markets. Again, we talked about that earlier. Gold gapped up and never looked back. It was pretty amazing to see gold's price action gapping up and then very, very reserved reaction to that FOMC report. It was almost as if the gold traders knew exactly what was coming right before it came out. So gold pretty much flat, although it did end up on the day by about 1%. Tomorrow, on the radar, looking out for the rest of the week here, jobless claims and GDP Thursday morning. So tomorrow, the party continues, right? We get through the FOMC report, jobless claims and GDP tomorrow morning, contract rollover on gold on Friday, and we got the Chinese New Year on Friday the 31st. A very exciting day today. I remind everybody out there to trade what you see, not what you think. Right? It's a lot easier than trying to predict what these Fed meetings are going to do or what these news events are going to do. We'll speculate all we want here on these calls on the newsletter every evening, but we all know it's what's happening in these charts. The technical patterns are what's going to make me a success. Guys, we're just getting started here. Thanks for joining me. Let's grab some charts. Let's take a look at what's happening for Thursday morning. That's tomorrow morning. Let's get started. All right, guys and gals, thanks for sticking here with me. It's Wednesday evening. We're getting ready for Thursday morning's trading session, and I'm ready to rock and roll. Are you? Let's grab some charts. Let's roll the sleeves up and get rocking here. First things first, starting with the black gold, Texas T, crude oil futures. I'm trading the CL314 contract. Here's my VIP chart. And first thing we'll talk about here is the two-day relationship. Two-day relationship, we're going sideways here multi-day. That tells me we are definitely in balance as we speak right now. We're not bullish. We're not bearish. One day to the next. Trading range, relatively wide, right? I'm going to have to adjust that. That should have said relatively neutral. So we're not really getting much clue out of that trading range today. And then you got the closing print. Closing print right back into the middle, right? Buyers pushed it up. Brought it right back into the middle. So right now on the VIP chart, all signs point to sideways. We've got a two-day relationship that is sideways day to day. We have a closing print right back in the middle. That tells me by the time that we finished the session today, the buyers and sellers were pretty much in agreement as far as where we wanted to be trading. The big deal right now is where we open tomorrow morning. If we open above 97.84, let me correct that here. Open above 97.84. There we go. We're going to be bullish. And I can see an immediate target up here at 98.81. So I'm buying up to 98.81 if we can get above at the open tomorrow. Now remember, if we open up tomorrow above 97.84, don't be surprised if we pull back a little bit, right? Gather some steam and then go higher. So we're not expecting it just to go straight line right to 98.81. If we get an opening print though above 97.84, we now know the buyers have reclaimed control, and we're now going to be looking for our entry pattern up to that 98.81. Got a couple more levels above that, right? We'll take a look at that tomorrow morning though in our live trade room. On the bearish side, open up below 96.21. Open up below 96.21. Again, don't be surprised if we retrace a little bit before we go lower, but I'm looking closely here for an opening print tomorrow at 9 a.m. on crude below 96.21. Then as we go lower, we get a few easy targets here now below us. 95.21, 93.65, 94.19. All right, so look for an opening print tomorrow below 96.21. If that's the case, I'm looking for selling opportunities. And again, it may not go directly lower. It may go higher before it goes lower. Doesn't matter to me though. Looking for those selling opportunities though as we go, whether we go higher or lower. I'll sell if we go higher as well. Opening print below 96.21. And again, targets here 95.21. You got the prior week open at 94.19, and then you get the prior week low at 93.65. You have to assume that if we end up bearish tomorrow morning, we're probably going to push to that weekly low before the end of Friday's session. All right, so look for the short side below 96.21 tomorrow morning after 9 a.m. Eastern time. All righty. That takes care of my VIP chart now on crude. So two-day relationship is relatively sideways and balanced. But don't tell that to the anchor chart, because the anchor chart's telling me right now that we have all signs point to higher prices. And as I zoom out on this anchor chart, what I want you guys to see here is I want you to see that we have a very long-term bullish channel. You can see it right here, right? So long-term bull channel. We just came off the lows of that bullish channel yesterday. Now here we are going higher. At the same time, I've got some significant resistance overhead that's waiting for me coming off of this big high up top here, just over 100 even. So we can smell that big round number of 100 right around the corner here. And whenever we get above $95 a barrel, we always know that 100 even is within striking distance, and one big push can get us up there. So right now, guys, we have, well, look at the short term here. We know what the long term is. Short term is bullish. I've got bullish channels. I'm above all of the key moving averages. I've got some key levels of support here at 97, at 96.63. I don't care how I get it, but right now on crude oil, I am looking to get long right now. And really the most important thing just to remember is when I'm buying at a discount. So as I go higher, don't buy at the highs. Wait for price to pull back and then look for your entry patterns. Now this is the anchor chart. I'm not going anywhere near the anchor chart for my entry pattern. I'm going to use a much faster time frame for that. And if you want to learn all about the entry patterns, if you want to see me take trades, just go ahead and come join me tomorrow morning in my live trade room. I'll walk you right through it. We call trades in real time. We make it really easy to shadow trade. It's a great environment. It really is. So if you like the analysis I'm doing here, you're going to love being with me actually executing this plan tomorrow morning at 8 a.m. So above all the moving averages, guys, we really are in a good spot right now. I've pulled back off that recent high of day, 97.75. I'm priced at a relative discount right now. I would much rather buy 97.04. I would love to buy 96.63 because that will get me in now at the low of that channel. Okay, so whatever it takes here, though, do not buy at the high. Okay, buy on a pullback, buy at a discount. Okay, wait for the anchor chart to pull back. Then go into your entry chart and look for those wave patterns, right, to jump into this thing here long. Where are we going up to? Well, my best target's 98.78. All right, we have a symmetrical extension. Members, pay attention here. 98.78, that's a symmetrical extension, ABCD extension. So that's going to be my immediate target, 98.78. Now, if you like hot air balloons and skydiving and wooden roller coasters, if you like to take some risk, you could then sell that 98.78. But remember, what do we always say in the trade room? Reversals that are counter trend are the lowest percentage. So remember, you got to have some experience. You want to take a bunch of those before you go putting real capital to work on those counter trend reversals, right? What I want to do is, if I'm taking a reversal, I'm going to wait for price to go lower here and then take the reversal off support. Why? Why is that reversal better? Because it goes with the long-term trend, right? The odds will be stacked in my favor. So really, as we go higher here, guys, I'm not going to be selling this area. I'm using these levels overhead as profit targets for my long side. And you can see here we got this 128 overhead. Notice how I could easily see us going straight up to 98.78, pulling back here maybe tomorrow night, and then making a final push going into Friday up to that 100. I could easily see it happen. You get the top of that bull channel, you get the 128, 101.25. So we had a couple levels here waiting for us. But guys, bottom line, I don't need to predict. I'm looking for entry patterns to get long right now, and I would recommend you do the same thing here as well. 98.78 is where I'm headed, and I'm looking to get in here at 97.04, 96.63. Those would be the ideal, right? That would be the ideal. But obviously, I'm going to look for patterns every step of the way going long here on crude. All righty? Looking good. There's your crude. Let's go from the black gold to the gold. Over here to the metal futures, the GC 214. Now, don't forget, we will have contract rollover on this either on the end of the day on Friday or Monday morning. It's tough to tell when the volume will shift. I'll be sure to keep you guys posted. Don't you worry about that. I'll be sure to check the blog on Friday. We will check the volume on Friday morning. I don't expect it to roll over Friday morning. I do expect gold, though, to roll over end of the day Friday or Monday. All right? Remember, as day traders, we look at volume, right? So what I'm looking for is I'm going to look over here at the gold volume, and when the volume starts to increase on the 414, that's when we move forward to the 414, all right? Probably going to be Monday. Looking at the VIP chart here, we still have that big gap down there. Boy, I love that color. What a good color. Let's look at that unfilled gap down there. Obviously, it's a little bit further away than we'd like it to be right now, but let's look and see what we have. As you can see here, went all the way up to that prior week high. All the way up to that prior week high. Look at the huge gap up, right? Look at the closing print yesterday. Now, what did we talk about yesterday? Go back and rewind the tape. If we opened above the high, what was the plan? Buy. And absolutely, you had some great opportunities to get long. Below the low, we'd be selling. Obviously here, though, we gapped way up at the opening bell this morning. Never looked back, almost an inch away from that previous week's high, and then certainly enough, towards the end of the morning, it had come back here and kind of fluttered back down, ending the day right around that 1262.3. Now, as I'm looking at this in the pre-market right now, we're trading right smack in the middle. Right now, I can see our number at 1266.6. So right now, we're right about that previous high of day, 1266.5. So we're not falling here in the aftermarket. We're not falling overnight, right? Like you would think it would be based on that closing print. We're actually pushing higher again here. So it's going to be a very interesting end of the week here for gold traders. 2-day relationship is very bullish, right? Big gap up. We did try to fill that gap. There's going to be a gap right here now, right? That has not been filled. So if we get below, well, we'll finish the analysis. So 2-day relationship is bullish. The range is very narrow. Now remember, guys, what does a narrow range tell me for tomorrow? Get ready for a big day, right? A narrow range today tells me expect a very wide range tomorrow. Then closing print at the low, very bearish. This is a very big clue, guys, a very big clue. By the end of the session today, the sellers had taken back control over gold futures. Why is that important? Well, again, like I just said, we have a big gap up that was never filled. So if we open up tomorrow below 1261.1, you can pretty much guarantee we're going down to 1250, right? Pretty darn quick. I would imagine it's going to sell off pretty darn quick. So as we always say, the 2-day range or 2-day relationship, the trading range, and the closing print, that gives me some clues, but those clues are going to be stamped with approval tomorrow morning when the opening bell rings. So open below 1261.1, I'm going straight to 1248.2, and again, we got another big gap down here to get filled as well. I could easily see us tumbling here to 1242.8 with an opening print below 61. So $20 move lower, yeah, that can happen easily tomorrow morning. Looking now to the upside, though, we don't have a lot of targets to the upside. The biggest trouble we're going to have tomorrow is if we get stuck around this prior week high. So look for an opening print tomorrow above the week high, 1270.4, and then we should go pretty quickly up to that 75.6. And then 1300 is only a hop, skip, and a jump away from there. So bottom line is, if we open up above the 70.4, I am bullish, buying pullbacks as we go higher. If we open up below the 1261, I am bearish, and I got my sights on that 1248, 1242. If we open up inside today's range, we got big problems. This is a very narrow range. If we open up inside today's range tomorrow morning, be on the lookout for a double distribution day. And a double distribution day basically means that we're going to open inside and spend the first portion of the day inside. And then what will most likely happen is by the end of the session, we will have broken out and moved into another range, right? Hence the term double distribution, right? So we distribute volume in two areas. And that could, of course, be down too. It wouldn't have to be up, right? So it could be a double distribution day tomorrow. It most likely will if we open up inside tomorrow's range. So what that means is if we open up tomorrow above 61.1 and below 70.4, be patient, buy the low, sell the high, but don't go to lunch too early because you're probably going to see before the end of the morning session tomorrow, that is if we open up inside the range, we're probably going to see before we go to lunch tomorrow morning, we're going to see it start to make new highs or new lows. I'm not going to try to predict right now. A lot of the reaction to FOMC is going to be focused on gold tomorrow. So keep your head on the swivel, be open-minded to both directions, be aware of the opening print tomorrow morning. and you'll do just fine. And again, come out and join me tomorrow in my trade room. I'll walk you guys right on through it. We do this every day with our students. Now, the anchor chart here. The anchor chart's beginning to look pretty darn similar to crude oil. Okay, pretty bullish on the VIP chart, and this is looking very bullish here now on the anchor chart. Now, looking below me here, I got the prior week low down at 1230. I've got a prior week high up top here. This prior week high will definitely be an impact player here because I get some resistance up here at 76 and 73. Bottom line, though, is looking at this anchor chart, we have a strong bullish trend in the short term. Long term, we're a little bit sideways, as you can see here. But I would assume, though, that those buyers are going to be hunting for this 1277 area. So what we have to work with now is a bullish trend, which means I've got levels below me now that I'm going to buy. So all these levels below me I'm going to buy: 65.1, 62 even, 56.2, and 48.3. Once we get below 48.3, though, the party's over for the buyers, and now we're going back to selling. All right, I can probably get away with selling short between 56 to 48. So be on the lookout for a short there below 56 down to 48, but not a guarantee. There's not a lot of range there to look for an easy entry pattern. What I'm most focused on right now, though, is the fact that we have a short-term channel, right? We're bullish. We're above all of the key moving averages. Like I always say, I want to buy at a discount. So as the price is going higher here, I do not want to buy at that 1270 high. Do not buy the highs. You wouldn't want to buy a BMW when it was priced higher than it's worth, right? Would you go buy a brand new car if you saw an advertisement that said a special, we've doubled the price? No, you wouldn't buy a new BMW if they doubled the price, right? You would buy the BMW if they slashed it in half. So wait for price to pull back. I can see there are two locations here that I'd love to buy at. That would be the 65.1 and the 62 even. Those are two great spots there to be a buyer. And remember, I'm going to use the overhead resistance area as well as that prior week high. That's going to be my target. Now, again, if you like to live on the wild side here, you can take a short at that 76.2. But as I always say, I'm looking for reversals that go with the trend, and this will be a lower percentage trade to sell that 76.2. So I'm going to take my profit at 76.2. All right, I will leave a portion of the trade to see if I can get up here to maybe the 1290. We'll see what happens tomorrow morning. But bottom line is, once I get above that 76, now I'm free here to start buying again, and I'm going to use all of these levels overhead as targets. All right, guys? So whatever we do, look for those buying opportunities at a discount. And remember, do not buy at the highs. Do not buy resistance. Do not buy the prior week high. Do not buy these levels overhead. These levels are targets. Okay? Look for the entry after it pulls back. Okay? Very simple technique. It's the reason why we've been successful so long here at School of Trade, and I teach it to everybody every day at 8 o'clock in our trade room. Last but not least, we can't forget about the poor mini Russell. This poor little guy got its butt kicked this morning. Came in this morning at about 6:30 Eastern time, and I'm going, what on earth is happening in these equity markets? Digging a little bit to the news overnight, and what we saw 3 different countries, 3 central banks, South Africa, India, and Turkey, all had emergency meetings and basically doubled what was expected to be. So, imagine if the U.S. Fed, imagine if they said, we're going to increase rates by 2%. Could you imagine what that would do? The whole world would go crazy. It'd be chaos, right? Well, we get a country like India, South America, Turkey. They did it, and of course, you're seeing what happened. So the speculation is that with higher interest rates, it slows down the economy. When the economies slow down, speculation and equity markets will slow down as well. Taking a look here, now there's not a lot of clues right now in this Russell. It's really tough to tell what's really going on out there in these equity markets. You've got to be bullish the U.S. economy. We just heard Ben Bernanke and the rest of the Fed crew tell us that they are optimistic of the U.S. economy. So they got to know something we don't know, right? They clearly are pretty intelligent folks down there at the Fed. So we're going to have to go with what they say. We have to really kind of trust them and trust the economic data. I think, honestly, what's happening in the equity markets right now is people are a little bit scared because so much wealth was created over the past 6 months. We had such a huge run up at the end of 2013 that you're combining this with some jitters over the FOMC and then some profit taking. If you made some easy money at the end of the year in 2013, you're not going to wait through this. You're going to take your money out of the market and wait for it to show some more strength and then get back in. So you're getting a little bit of a double dip here on the equities. You got some concerns over FOMC and tapering, and you've also got some issues with some profit taking, right, for the average investor. So looking at this VIP chart, again, you're not going to get a lot of clues out of this one. Sideways 2-day relationship, narrow range, closing print was bearish, but at the same time though, the closing print was bullish yesterday. So what did that do for us? Didn't do much for us, right? What did we have to do? Opening print, right? So yesterday, if you remember yesterday, we said get ready for a big day today. Didn't get it. We said we got bullish sentiment at the end of the day yesterday. Oh, that bullish sentiment didn't last very long. So while the rest of the world tries to predict, we are not going to be able to predict. Tomorrow morning, I'm coming in and my main focus is where's my opening print? Am I below 15.8? If I'm below 15.8, I'm selling short. I've got 1105.3 down here below me. We should have a few more levels here you guys can see. So if we get in below 15.8, I got targets at 5.3, 5.8, 1.1, and 88.6. Again, those are targets. I'm not buying those areas. If we're bearish at the opening print below the lows today, I'm selling this thing off. If we go higher here, now this is going to be a little bit chaotic. Get above the 31.5, we are most likely going to get stuck around this 37 area. So don't be surprised if we see an opening print above 31.5, but then we stall out a little bit at this prior week high. Then what will likely happen is we'll either go straight through the roof or we'll collapse back down into the range we're in from today. So be on the lookout. If we get below 15.8, I'm going to expect a bloodbath again tomorrow. If we open up below 15.8, I am going to expect it to be raining Russell tomorrow morning. All right, we'll be selling short in the trade room. If we open up above 31.5, though, it's a little bit more complicated because we got that prior week high prior week low directly overhead. If we get above that, though, now we're talking. Now we've got green light up to that 63.3, up to the prior week's open at 67. So we could easily rebound and go right back up to weekly highs. If you scale out a little bit here, you can see by the end of the week, I can see easy way. We get above that prior week low. We can jump up to that 63.3 pretty easily, fill in this gap right here. Then, if we're bullish going into the week, there's your weekly high right there, 1180. So tomorrow morning, I can't wait to see what that opening print looks like tomorrow morning. Very anxious to see how this is going to react tomorrow. So come out and see me tomorrow, and we'll take a look again and see how the opening print looks. Again, I'm not too confident to predict right now because there's been so much stuff happening in the equity markets over the past few days. Now, on the anchor chart tells a very specific story. What direction are we going in? We're going down. Market structure is bearish. You can see here we have a bearish trend. I've also, if you look closely here, if you zoom out, I've also drawn a couple trend lines on here. And these trend lines are creating, there's your trend line from the top. Okay, so trend line coming down from the high. And then I get an old trend line coming up from the low. And you can see, boy, we are right there. We are right there. So look back in time here and you can see we get a trend line post there. Keep going. There it is right there. So there's where it begins back in November. So we go November low, that November low at 1071.8. And then we go a little bit higher, right? This is where the second anchor for that trend line occurs right here. 1091.8 in the middle of December. We go higher, and now here we are coming all the way back down, and look what happened. All the way back down to that trend line again. So major support here settling in. Now the bottom line is these support levels I'm going to use as profit targets, and we still have room to keep selling though. I want to sell short in a downtrend, but what do I want to sell short at? at a premium. So bottom line is, do not sell short at the low of this range. You're actually in a very good spot right now to get short. There were some very easy opportunities this morning to sell short on Russell. Remember where they were? Right here, right? About 11 o'clock. Right here, another one to sell short. And again, right, just recently, a few hours ago. So as you see any market, I don't care what market it is, as it begins to go lower, don't sell those lows. Sell at a premium. When we sell at a premium, the odds are on our side. We usually have resistance overhead to protect the position against losses. And at the same time, by selling at a premium, we have this wide open space now for price to move. If I try to sell at the low, I'm going to run right into this brick wall here of buyers, right? It's going to make my life miserable. This is why new traders oftentimes know where the market's going but can't profit from it. It's because you're trying to sell at a discount, right? Makes sense to me. And every day I teach this stuff in our live trade room in real time. So selling at a premium, I would love to sell the high of the channel. I would love to sell the high of this price wedge. I've got 30.7. I've got 39.1. Any of these levels will work well for a short. Just be patient for it. One thing to do, though, is do not sell into this area here. Do not sell this 11.15 to 11.14. We got some major support lying there. Now, we get below that level, though. Now we got what we need. Get below it, you got it. I'll keep selling short again, and I got another profit target starting off at 1107.9. I get 1106.1. All right, so look to take profit, 1108, right? Exactly 1107.9 on the way short tomorrow morning, and I got below the big round number of 1100. We got 1095.6 will be our last major target below. So bearish on Russell. We're below all the key moving averages. We got lower lows, lower highs. We are at a premium. Guys, no excuses. Find that entry pattern to get short and take it with confidence. Now, again, I want to remind you guys, come out and see me tomorrow morning as a student in our live trade room. Join our free trial, register for our newsletter right on the blog, and I'll see you guys tomorrow. It's been an incredible week of trading with us today, this week so far. An exciting day in the markets today. We heard from the Fed today. Tomorrow we're going to hear from jobless claims. Never a dull moment when it comes to being a professional trader. Hope you guys saw value in this presentation today. Don't forget to share this with a friend, and don't forget to send me your feedback so I can continue to make this better for you every single day. Signing off now from Los Angeles, our corporate headquarters of School of Trade. From the entire team here in the corporate headquarters, we'll see you guys tomorrow. Adios, amigos. Bye-bye for now.